What is up, everyone? This is your host again, Limitless, with another episode of Limitless Talks. You already know what it is. This is that show where we talk about politics, economics, and propaganda. You understand what I'm saying? Peace, love, and light to you all out there. Let's get to the funny article very quickly. We've got Meta has built an AI supercomputer it says will be world's fastest by end of 2022. Social media conglomerate Meta, we know as Facebook, is the latest tech company to build an AI supercomputer. We know AI supercomputer ain't nothing new, just like they say, the latest tech company. If you go over to the east, to Asia, look, there's all sorts of computer out there, quantum soup, whatever you want to call it. It's all out there, and these things are fast. You understand? But when you look at this right here, they talk about machine learning system for you know other artificial intelligence computers. Guys, this right here, it's no brainer what the agenda is. You understand what I'm saying? They want the sheeples in the metaverse so they can download their brains and feed it to the AI system. Guys, the only way they're training these algorithms and artificial intelligence to understand our world is through us. The data that we produce, the things that we do, our activities, all of that, they're literally taking it and they're feeding it directly to these, AI computers. Now, these AI computers, they've got access to the internet already. They've learned a lot about us. Now, just imagine these computers learning directly firsthand from people in the metaverse and how they're interacting with each other. You understand what I'm saying? It's gonna be a game changer. And like I said, when you put two and two together, it equals to four. And the four here is to download your brain into the supercomputers for the AI to utilize. You understand? It's literally that simple. But anyways, before we move ahead to the rest of the things we've got for today, let's take a quick break and we'll get right back to it. Welcome back, everyone. This is your host again, Limitless. I appreciate you all listening in. Remember, share with your friends, family, loved ones, your haters, whoever it might be. They need to know, especially the average Joes. The 9 to 5ers. We don't have time to be doing a lot of this research, and it's all by design. It's literally all by design. They don't want us to learn economics. They don't want us to learn politics because the languages involved in these two topics is commercial in nature. And when it comes to the commercial activities of the economy, they don't want us involved, because when we're involved, then we understand exactly what's going on, and if we understand exactly what's going on, we're more inclined to want to change the system for the better. You understand? So moving on, let's check out all our usual indicators and see where the market is at currently. So yield rate is still the base yield rate is still at 0.25%. Current quantitative easing or reverse repo, whatever you want to call it, is 895 billion, and you've got inflation at 5.4% still, guys. We know inflation is higher than that. I don't know how long it's taking them to update this things. You understand? So looking at the crypto market right here, things came up couple percentage, nothing major. I usually like to look at the 7 days, and if you look at the 7 days, things are down. You know what I'm saying? Things are down, still down. You know, still down. I mean, we were at two, almost You know what? We were at almost 2.5 trillion around summertime. Look where we're at. you know, 6 7 months down the line. You understand? This ain't a joke. This is not a joke. They gotta build a new economy, and that's essentially what they're doing. So, looking at the bond yield rate, we can see they're starting to climb. On the U.S. Treasury side, they've increased uh, all the rates are going up. UK bonds, they're down at the moment. Look at the German bonds as well. Uh, they're up. The UK is gonna follow suit accordingly in due time. So let's check out the VIX against uh, DAX. Let me add Dow Jones in there as well, just for completeness. You understand? Just for completeness. Anyways, so you look at this right here. The 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 trend line pretty much, you know, it's similar to each other when it comes to the current legacy market. However, Bitcoin shows us exactly what's going on, and as we can see, VIX is still on the rise. And what's happened to Bitcoin? It looks like it's making a turn back down. So looking on the market, it looks like we're gonna get a repeat of this right here. So you might as well just cut this and just put it down here. As you can see, we still got a bit of room to go, and that's exactly what's gonna happen. We're gonna make that little V shape up, and then we're gonna come right back down. As we can see, we've got the VIX, rising, and the stocks are dropping, and at the same time, we've got the yields going up. And let's see how much the Fed's done today. So again, the Fed's still on that quantitative easing. You see, they call it reverse repo. The Bank of England calls it quantitative easing. It's all the same thing. Same thing, no difference. They're printing money and buying assets. You understand what I'm saying? They're buying every public liabilities out there, whether secured or unsecured. They're buying it. You understand? They're gonna repackage it as a bond, right? And they're gonna be the ones to also buy this bond, right? Make money from it, and then still go ahead to charge us again for the same bond. You understand? So moving on, moving on. So right now we've got public sector borrowing nears 147 billion, second highest since records began in 1993. The Office for National Statistics said this morning public sector borrowing from the end of March to December was 146.8 billion, the second highest since record began in 1993. Government borrowing stood at 16.8 billion in December, down by 7.6 billion from the same month in year earlier, according to the official figures. The data also showed that public sector debt, excluding public sector banks, so essentially what they're telling you is public sector, that's us. So all the retail debts, that's what they're talking about, excluding the public sector banks, was 2.34 trillion at the end of the month, or around 96% of gross domestic product. Guys, I don't know what to say. Literally, I don't know what to say. Uh if if the public sector debt is around 96% of gross domestic product, we might as well not be making anything. You understand what I'm saying? Everyone might as well just pack up their bags, say fuck it. What the fuck is what we doing? So guys, we need to pay attention to these things right here. This is not gonna end well. This is a signal. You understand? This is a signal. They're gonna reset everything. You understand? They're gonna reset. This is like we're just making money to 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 lose money. You get what I'm saying? It's 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 not making any sense at all. So moving on, we've got Sunak has enough room to scrap national insurance hike, according to top tier economist. Again, guys, due to a lot of the borrowing they've been doing, again, on behalf of the public, of course, it's always for the public. You know, listen to that word, they use it a lot. Public, 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 public. It's for the public. So that's why we're doing it. So, right there, they're looking to basically increase taxes. And what do we know about taxes? Every government eventually tax themselves out of power. It's just what it is. The latest one is the French, Revolution. It was all to do with taxes. You understand what I'm saying? So again, this is another economic windfall we need to be on the lookout for. They're gonna tax us more, even though they shouldn't be taxing us. However, because we're seen uh, receiving benefits and privileges, that's why they're taxing us. As the public, we should actually be conducting our affairs privately. And when we conduct our affairs privately, we wouldn't actually have incomes, we'd have revenues. And revenues are taxed differently from incomes. Go do your homework on that. Moving on. We've got drop Bitcoin as legal tender. IMF urges El Salvador. This is propaganda right here, guys. We know this is all to stoke fear out there uh, amongst the market participants. That's all the intention is. And as we can see right here, that little drop that's coming, you know, this 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 is gonna be used to aid it, even though we know it's the Fed basically letting a bit of air out of the balance sheet. You understand what I'm saying? They haven't, stop uh, the quantitative easing completely, because if you go back to the history, these guys were doing over 2 trillion a day. Guys, this is what they're doing every day. This is not monthly or every 3 month or yearly. This is every day. They're doing trillions of dollars every day, guys. Trillions. And if you go back in the history, they're doing over 2 trillion. So by reducing the amount of repo they're doing, that's why, you know, we're seeing the market tank the way it's tanking. You understand what I'm saying? Because they're pulling money out of here to satisfy certain obligations. You understand what I'm saying? If they were doing over 2 trillion before, like they were doing, they wouldn't really need to liquidate too much funds from the market to meet those obligations, because they would just use part of the repo to meet those obligations, which is what they've been doing. Okay, because there's a lot of products they need they need to service, and they're basically just printing money and doing what they need to do, essentially. And all of that is gonna come back to bite the public that's paying taxes. You understand what I'm saying? So moving on, we've got Biden to issue executive order putting White House behind U.S. crypto policy. The directive will put the White House at the center of the U.S. government effort to regulate digital assets. We know 2022 is the year of ISO. You're gonna see all this government out there. They're gonna It's gonna happen very quickly. It's not that they don't know what to do. Trust me, all the paperwork is ready. These articles, these articles are like, you can think of them as timelines. You can think of them as signals and stuff like that of what's about to happen and all that. Moves like this is telling us that they're ready to take the next step. And as we'll find out as we go on, you'll see that banks have already started, you know, ISO migration already. So all they'll need to fully go live with this thing is the regulatory clarity behind it. Some government already have plans in place and already implementing it, and some, like, you know, the Western government, they're behind on purpose because they want the emerging markets to lead us into the fourth industrial revolution. And guys, this is what this is all about, the fourth industrial revolution. So moving on, we've got we've got crypto 2022, the new normal in finance. So this is an insight from Ripple. You know, go check them out. You know, they drop nuggets every now and then. So for 2022, we can expect explosive growth in crypto payments. Now, as we can see, it's an ISO year. So it's gonna bring huge volumes of money into the market. You understand what I'm saying? I don't want to spend too much on this. It's just the usual stuff we've been going through. DLT technology, CBDC, and some of the other project going on. And also, NFT is gonna go mainstream. We know Ripple is already planning on building their NFT platform, which will take still some market share from Ethereum. Because right now, a lot of these NFT platforms are built on Ethereum. Soon, when Ripple launches, all that will be it will be settled. You know, Ripple's got faster transaction per second. It's just got superior technology in general. You know, cheaper transaction fees, can handle more transaction, easily scalable. The only thing is it's centralized, but at the same time, they want to say it's decentralized because, you know, they've got uh, uh, different validators all around the world using nodes and stuff like that. But those guys are still all controlled on a central system. So that we can, it's debatable basically. So next we've got regulators to step up. So like we've understood this year you're gonna see a lot of the government, you know, countries across the globe, they're gonna start cracking down and start implementing concrete regulatory clarity and policies in regards to digital asset. And we're gonna start seeing more and more digital asset products being released and launched, and you know, the averages would then be able to start getting into it. And by that time, I'll be honest with you, it'll be too late. It will definitely be too late. And lastly, we got here multi-chain future. If anyone has been looking into crypto and understanding exactly what's going on, we know that all these different networks have to be interoperable with each other. Any crypto that's not able to speak to any blockchain that's not able to speak to another blockchain will be left out of the picture, because things needs to be seamless. Things needs to be able to communicate with each other to foster uh, uh, an efficient payment environment. Because if you just think of how much transactions we as humans do every day, and that's humans doing the processing by hand, a bit of automation in there, about 20% automation. But just imagine when robots and algorithms and drones and all this other machine comes in, they're gonna be doing way more transactions in comparison to what we're doing. So these chains need to be able to speak to each other very quickly with, you know, a moment's notice. So moving on, we've got BlackRock plans to launch a blockchain and tech ETF tracking crypto focused companies worldwide. If we know anything about BlackRock, we know this is the errand boy for the central bank. You understand what I'm saying? For the central banks, for the big giant retail banks as well. BlackRock is one of the errand boy. You understand? They take huge chunks of public funds give it to BlackRock asset fund asset manager. And what does BlackRock do? BlackRock invest in various uh, stocks out there, right? And then what happens is people can come, the public can come and invest and trade those ETF they've put together by investing fund in the underlying asset. So essentially, people aren't buying the asset, but rather they're they're buying the product layered on top of the asset, which is basically whether it goes up or down. You understand what I'm saying? So they're gonna focus on 35 companies, which will include crypto miners and crypto trading exchanges, as well as businesses focused on blockchain technology, according to the filing. So, as we know, regulation is coming, and you best believe this will get approved. So far, all the ETFs and all sorts that's been that's been requested has been blocked because they don't want the casino to end, because bringing in an ETF means there have to be a regulatory clarity. You understand what I'm saying? So we're gonna start seeing concrete policies in place to regulate crypto. It's just that simple, and digital asset in general. So moving on, we've got Finaster extends collaboration with National Bank of Greece for ISO 20022 migration. As we can see, these banks, they've been moving in the background to basically upgrade their payment system to the new payment standard, which will include the blockchain technologies behind ISO 20022, which is the likes of Ripple, XTC, R3 Corda, XLM Hyperledger, and of course behind these guys, you've got the big uh, tech companies from the early 90s, 2000 behind them: Accenture, IBM, Google, and so on. And the big banks are behind, the tech companies. Guys, we got to understand the hierarchy. All right. The commercial banks, they deal directly with the central banks. They're like the middlemen. They take the money and then they distribute it to the people. These banks have been given authority to basically print money, and trust me, we can do the same as well. Essentially what we're doing is what essentially what we're doing when we go to bank to loan money is we're giving these guys the same authority we gave to the government to create money. We're basically going to these banks and basically allowing them to use that same authority every time we go to them and ask for loans. You understand what I'm saying? Because that authority extends to them via the government. From the government to the central bank, from the central bank to the commercial retail banks. So lastly, here we've got Kenya upgrade real-time payment infrastructure for ISO 2002. So again, guys, I put this here just so we can see that things are moving fast. You know, a lot of these banks, they're starting to migrate already, because as we know, a lot of the developing markets, they've already launched their CBDC. If they haven't launched, they're in their final test phases and stuff like that. So after that's done, the next thing is to switch their system. And after they switch their system, a real world test. You understand what I'm saying? They've called it real time payment for a reason. All right, money will be moving in real time. No more waiting 2 days, 3 days, weeks for money to settle and stuff like that. Nope, things will be settled in real time, very very quickly. But anyways, guys, don't forget, go on barchart.com to find out any options uh, and futures that's expiring in the future. As we know, I like that. As we know, on the uh, on the 28th, we're gonna have some options and futures expiring again. which will dip the market. You understand? So that again will contribute to this drop where that's looking very, very possible that we're gonna have. So, you know, with all that being said, guys, I appreciate you all listening in. Please, please remember to share with your family, friends, and loved ones because we all need to understand how the world works. Because that's the only way we'll be able to actually make conscious decision to change our environment. And remember, we are our environment. Whatever we allow in our environment is gonna affect us also. So we need to get out of this cycle as human race. You understand what I'm saying? It's about time we actually live on this planet the way we should actually live. But none of us need to pay for anything. People should be able to have access to anything they need if we all work collaboratively and together. You understand what I'm saying? We don't need to be greedy. We don't need to alienate one another and so on. So, guys, with all that being said, peace, love, and light to you all. I appreciate you all listening in. I'll catch you on another episode. Peace.